I'm going to be talking about today's oil prices. Rigs are dropping at record rates. And I also want to chat about what do I see in the future as far as oil prices and also our current oil well investment projects. I'm Sean Pruitt, president of Kingdom Exploration. The Market Watch here has a good article. Oil prices log first gain in 3 sessions after report OPEC will weigh deeper output cuts. Oil futures finished higher Tuesday and logged their first gain in 3 sessions. Report that major oil producers will consider deeper production cuts. No, they're desperate. Of course they're gonna cut production. It looks like OPEC is confirming that they are going to do whatever it takes to support oil. OPEC is desperate. Okay, they're taking their Aramco stock public, and it's an IPO that could be worth $2 trillion. And the only way to get that evaluation is $80, $90 a barrel. Well, we're at $58 a barrel right now. Okay, they're not going to be able to make that happen. And Brent crude is $63.40. And so the difference between WTI and Brent crude, WTI stands for West Texas. Most of your inland drilling is going to get WTI spot price. So if you drill a well in California, Texas, Oklahoma, all over the U.S., you're going to get $57.86 today. And Brent crude is more like if you're shipping oil out of the Houston Canal and you're exporting it, you're going to get roughly $63.40. So U.S. rig count crashes again, loses nearly 100 rigs in 3 months. Oh my God. That's unbelievable that we're losing that many rigs. We only have a total of 674 rigs in operation right now. So to lose that many rigs, that's a huge percentage of our rigs. Okay, the U.S. oil and gas rig count continued its downward slide this week, according to Baker Hughes, as the rig count piles on a string of losses with a drop of 11 rigs for the week. For oil rigs specifically, this week marks 11 decreases out of the 13 weeks, falling 96 rigs in that time frame. The total oil and gas rig count now stands at 806, 276 down from this time last year. So this time last year, we had 276 more rigs in operation. And the fact that rigs are dropping means there's less investors investing in oil. And I'm not talking about individual investors. It's mainly hedge funds and institutional funders and banks and what have you. Quite simply, they're not seeing the returns that they expected, okay, in Shale. And so that bodes very well for my business, because we're involved in conventional oil plays. Conventional oil plays are profitable at $58 a barrel. I mean, back in 2005, oil prices hit $55 a barrel, and we thought we were rich. So, and then later, 2008 went to $150 a barrel. So, conventional oil, you could profit at these lower oil prices. Shale is it's a different story. Anyways, U.S. oil production bucks drilling slowdown, keeps crude prices in check. Drillers are laying down rigs, hydraulic fracturing equipment sits idle, and U.S. energy producers are promised physical restraint, yet domestic oil production keeps rising. So we're the only reason why it's rising, they're just turning wells on that they already drilled. But I'm telling you right now, we're getting ready to be in a situation where you're not going to see any brand new wells. You're not going to see any increased production. And as oil prices continue to stay here, oil companies are going out of business. The oil market's starting to dry up even more. And so it's a great opportunity for us, because now's the time to buy. Oil prices are low. It's cheaper to drill. Cheaper lease acquisitions are a lot less expensive, and we could get into areas that are we would never be able to get involved with had oil prices dropped. And so soaring Chinese demand sparks Middle East oil price rally. Thank you guys for finally really started to talk about this stuff. New refining capacity coming on. Let's see. Let me. So I highlighted some of these things here. I found a cool little extension that allows me to highlight on Google Chrome, and so now I could find what I'm looking for quickly. So Chinese oil imports once again surged to a record high last month at 10.7.2 million barrels per day, up 11.5% on the year. This was the first time since April this year when imports topped 10 million barrels per day, spurred by the 400,000 barrels per day new refinery of, can't say his name, don't speak Chinese, facility. Last month, Beijing issued higher oil import quotas for independent refineries, which will allow them to buy an additional 12.9 million tons, 95 million barrels of crude to provide feedstock for their new refineries. So Beijing and Chinese oil imports are surging tremendously. And I talked about that in previous videos. IEA sees $90 crude ahead of oil's downfall. Okay. So the IEA noted that the world is adding around 100 gigawatt. Okay, so one of the things that they talked about here, and one of the things that is going around the news, especially left-wing media, is that, hey, green technology is going to replace oil. They don't understand what they're talking about when they even say that, okay? And so I'm going to explain further. The IEA noted that the world is adding around 100 gigawatts of solar each year, enough solar to cover 200,000 football fields. Oh my God, that's going to replace oil. That's what people think. It's ridiculous. When I read it, I'm just like, this is crazy. But then I realized that they were actually made sense here. However, it would take 200 years at that pace to satisfy global energy demand at 2018 levels. Guys, 200 years. Jesus is coming in before that. This ain't gonna happen, guys. 200 years solar power? I don't think so. As for oil, the IEA sees demand growing at 1 million barrels per day rate through 2025. So we're seeing oil demand increase as well, and it should flatten by 2030. Okay, that's what they're expecting. It might not. Okay. And because of depletion of existing sources of supply, so they're keeping track of there's other oil fields that are depleting. The U.S. accounts for 85% of the total global increase in oil supply over the next decade, growing from 6 million barrels a day in 2018 to 11 million barrels a day in 2030. The agency sees the current slowdown in shale output as temporary. I'm telling you right now, there's no way we can maintain these outputs at these prices. The only way we can, in the foreseeable future, to increase output is unless oil prices increase. The IEA is not basing that upon the fact that if we sit at these current prices, there's no way we can maintain these numbers. Okay, it's completely impossible. The only way that what they're saying is true is unless oil prices do go up to $90 a barrel, then it's profitable for Shell to continue. The Shell revolution has stimulated more than $1 trillion in new investment over the last 10 years, nearly $900 billion in upstream, and the rest on new pipelines and other infrastructure, including LNG export terminals. Okay, so I'm telling you right now, the $1 trillion that they invested, they haven't gotten their money back. The upstream shale industry as a whole has yet to achieve positive free cash flow. How in the world can that game continue without positive cash flow? It's unbelievable, and that's why the rigs are shutting down. That's why the rigs. That's why we've lost over 250 rigs since this time last year. It cannot continue this game, and so bottom line, right now is the time to get involved in oil. We're getting incredible oil projects at a fraction of the price. We're getting into incredible fields. We got a well going online very soon for our current fund. I'll be having details about that later. But one thing I wanted to talk about, the fund, quite simply, you are spreading your money across multiple wells, so it's a mutual fund of oil wells versus getting involved in one or two wells. Not only that, you don't have the same kind of liability you would investing in one well. You have the liability. If there's a cost overrun, you got to pay the cost overrun. Let's say you invest $100K in it, and there's a 30% cost overrun. Now you're writing a check for 30 grand. And what if it's a dry hole? Now you're writing a check for 30 grand for a dry hole. I've done that before. I've lost tens of millions of dollars in the oil and gas industry. And if all we need is 20% of the wells to work in order to make this project profitable. if the shale game continues this road, the rig count is dropping, the investment amount is dropping as far as investing into new oil plays. You're not going to maintain these outputs. This game is going to end, and the rigs are speaking for itself. Okay, wake up news, wake up America, wake up green energy freaks. Rig counts are dropping, and it's huge for my business. It's actually very good for me because there's less competition. It's easier to find a good lease. It's cheaper to drill. People want to feed their families right now during the holidays, and they're desperate for work right now. So it's a lot easier to find economical deals. And so bottom line, we're getting into leases that we wouldn't be able to get to hadn't oil prices drop. And the more rigs are taken off the market, the less investment dollar being dumped in oil, and I'm talking about shale. It's going to, in the end, it's going to cause supply and demand. Here's supply and here's demand, and we're going to see a shift. And when that happens, okay, and we're on our way. When that happens, you're going to see oil prices back up to $80, $90, $100 barrels of oil again. And in the meantime, we're putting economical deals in our fund at cheaper prices, and then when oil prices come to $80, $90, $100 a barrel, we're all writing home to mama. And so we're doing so it's very exciting times. Now's the time to invest. There's less money out there, but we're able to get it done. We got a well going online very shortly in the fund, and we're really excited about it. But anyways, I'm Sean Pruitt, president of Kingdom Exploration. If you have any questions, my contact information is going to be below. And if you hadn't subscribed yet, down here, there's a little icon, my little logo. You could click on it, subscribe to our channel, and I try to post one of these videos once to twice a week. Anyways, if you enjoy these videos, or if you like to talk more about oil and gas projects, feel free to give me a call. I would love to chat with you. Thanks.